Germany has embarked on an ambitious economic program. The government has unveiled a massive €500 billion fiscal package. This initiative signifies a significant investment in the nation's future. A cornerstone of this package is a dedicated €500 billion fund. This fund will target two crucial areas: infrastructure and climate change mitigation. Within this fund, €100 billion is specifically allocated to climate and economic transformation projects. This substantial allocation underscores Germany's commitment to tackling climate change head-on. It also aims to position the country as a leader in green technologies and sustainable development. The scale of this investment is unprecedented in Germany's recent history. It signals a bold and decisive approach to securing long-term economic prosperity and environmental sustainability. This fiscal package marks a significant departure from Germany's traditional economic policy. For years, Germany has adhered to a strict debt break rule. This rule limits the government's ability to borrow money. It has been a cornerstone of Germany's fiscal policy, ensuring financial stability. However, the urgency of the current economic climate and the need for substantial investment have prompted a rethink. In a historic move, the German parliament voted to temporarily set aside the debt break rule. This decision reflects the government's understanding that significant investment is needed to stimulate economic growth. It also highlights the commitment to addressing climate change, even if it requires a departure from traditional fiscal policies. The parliamentary approval, achieved with a clear majority, demonstrates the broad political support for this significant policy shift. The announcement of Germany's €500 billion fiscal package has sent ripples through the global markets. The immediate reaction has been one of confidence, with investors showing strong faith in Germany's economic future. One key indicator of this positive sentiment is the rise in bond yield. The yield on 30-year German government bonds, known as Bunds, has surged by 25 basis points. This increase in bond yields reflects a growing demand for German debt. Investors are drawn to the perceived safety and stability of German bonds, especially in times of economic uncertainty. Another notable market reaction is the strengthening of the euro. The euro has appreciated against other major currencies, reflecting the increased confidence in the eurozone's largest economy. This positive market response suggests that Germany's bold fiscal move is being well received by investors worldwide. Section 4. Economic projections, a mixed bag for Germany's future. The long-term economic impact of Germany's fiscal package remains a subject of debate among economists. Various institutions have released projections, offering a range of potential outcomes. The Organization for Economic Cooperation and Development, OECD, has revised its GDP growth forecast for Germany in 2025 to 0.4%, down from an earlier projection of 0.7%. This suggests a cautious outlook, acknowledging the potential challenges facing the German economy. Meanwhile, the IFO Institute, a German economic think tank, predicts even slower growth of 0.2% for 2025. However, other institutions offer a more optimistic view. The German Institute for Economic Research, DIW, projects that the infrastructure fund alone could boost Germany's economic output by over 2% annually over the next decade. The DIW forecasts GDP growth of 2.1% for 2026, highlighting the potential for a significant upswing in economic activity. Section 5. A ripple effect. Europe feels the impact. Germany's substantial fiscal initiative is poised to have significant ramifications for the broader European economy. As the Eurozone's largest economy, Germany's actions send a powerful signal to other member states and have the potential to stimulate growth across the bloc. One notable trend is the increase in defense spending across Europe. This is driven in part by the ongoing conflict in Ukraine and a renewed focus on security. Germany's decision to exempt defense spending from the debt break rule could encourage other European nations to follow suit, potentially leading to a coordinated increase in defense budgets. Another factor contributing to a sense of optimism in Europe is the prospect of a ceasefire in Ukraine. While the situation remains fragile, any progress towards peace would have positive economic implications for the entire region. Section 6. A global perspective. Germany's move in a changing world. Germany's fiscal policy shift comes at a time of significant global economic uncertainty. The world is grappling with various challenges, including slowing growth, inflation, and geopolitical tensions. In the United States, economic growth is expected to slow down, while inflation remains a concern. The Federal Reserve is projected to implement rate cuts to stimulate the economy. Canada faces a similar scenario, with revised growth and inflation forecasts, leading to expectations of rate cuts. The United Kingdom is also experiencing sluggish growth and rising inflation, prompting expectations of rate cuts by the Bank of England. Japan, on the other hand, stands out with steady growth and robust inflation, leading to expectations of gradual rate hikes by the Bank of Japan. China, the world's second-largest economy, is experiencing slower growth. The Chinese government is shifting its policy focus towards boosting domestic consumption. Section 7. A new era for Europe? The potential long-term benefits. Germany's €500 billion fiscal initiative represents a bold bet on the future. By investing heavily in infrastructure and climate change mitigation, Germany aims to secure its long-term economic prosperity and position itself as a global leader in sustainable development. The success of this ambitious plan hinges on several factors. Effective implementation of the Infrastructure and Climate Fund will be crucial. Transparency, accountability, and a focus on delivering tangible results will be paramount. Germany's ability to navigate the challenges of an uncertain global economic landscape will also play a vital role. The long-term benefits of this fiscal package have the potential to be significant. Modernized infrastructure can enhance productivity, boost economic growth,